Hello again, internet, and it is my second video log, or rather, I would like to call it day one of uh, where everything is going to start. So today I'm going to talk about three things: um, where it all began, where I'm planning to go, and what I'm probably going to do like in a few minutes. So once again, my name is Cubert, and this is my journal for my progress of as a trader from way before I can even trade profitably. So first of all, I started with crypto back in April 2019. So back then I was looking for something to invest in, and I thought crypto would be a good choice. So, but back then the price was about $9,000, and I went in not really at the right timing. And so after I bought it, the price dropped, and I was thinking, maybe what if I could actually read the charts and actually learn to look at the charts and predict price movement. So I could get so much more out of it rather than just buying and holding for I don't know how long. And crypto isn't something that is certain. It's very volatile. Even today, it's still volatile. So back then, I thought, well, I might as well learn to read those charts. So from there, I learned. I found this site called Baby Pips, which actually teaches about forex, but it's still currency. So the basis stands. So that's where I learned the basics of candlestick charts, technical analysis, and so on. And from there, I found out there's technical analysis, fundamentals, and sentiment analysis. But of course, FA and TA is the main two analysis methods that are being used out there. Um, so in crypto, initially after I first started learning and finding a proper exchange, back then and even right now, I'm actually using Binance. Um, I initially had a couple of small wins, and I guess everybody starts with small wins, and it gets you hooked. And it turns out you're actually just gambling, like you don't know what you're actually doing. You think you know what you're doing, but after you do it, it's like no, it doesn't work that way. Or it just go boom, and you lose all your investments. So I tried to learn more, and things started going bad, and I was wondering like maybe I'm missing something. And why do traders actually make so much money? And then I realized one thing: I can't actually sell crypto without owning the crypto. And then I learned about this thing called shorting currency pairs, or you're able to short something without actually owning the share. And that's when I realized I can't short my cryptocurrencies, because it's when I trade crypto in Binance, initially in the spot crypto, you're actually holding onto the real cryptocurrencies, whereby you can actually transfer it out into your wallet and so on. And which is at that point I discovered Forex. It's not really I discovered, but more like I kind of tried to learn more about Forex, and which at about the same time Binance was scheduled to release what they call Bylines Futures, which is basically futures trading, where you can actually trade futures with leverage. And I got excited. Like, wow, this is so much better. I can trade 10 times the amount I usually trade that I could make a couple hundred in a few minutes. But as usual, things went well in the beginning. It always goes well in the beginning. I guess that's where the term beginner's luck comes from. So but after that, I took very major losses, and I went from $1,400, USD, to $400. So I lost $1,000 there. I I think I did quite a good job trying not to lose everything. Um, I guess I'm a more conservative, sane person compared to some other traders out there who literally blows their account multiple times over. So that was when I decided that crypto was too highly volatile, and I decided to learn proper trading from there. So at the moment, I'm still, to be frank, what I'm good at is learning. I'm just good at learning every single thing I can find out there, but I don't apply them. So I probably know quite a lot on what I have to do, but I haven't actually put anything to the test and built any firm structure. And I'm also at a dilemma of between discretionary trading and systematic trading. If you don't know what's the difference between discretionary and systematic, you can go Google it up or search up some YouTube videos. But basically, discretionary trading is where you make your decision based on what you're seeing on the charts almost at that moment. So it's like thinking on the spot. Compared to systematic trading is whereby you develop a system which gives you a clear go or no, where it's just a red and green traffic light. So systematic trading is very yes or no based, where discretionary is like, okay, maybe I feel it's gonna do this, so I'm gonna do this. So personally, I think I'm more of a systematic person, so I'm gonna try to explore a bit more of this systematic, because I actually learned about systematic trading first, and after realized that there are actually discretionary traders out there, which is mainly based on price action. So price action is a bit leaning towards discretionary, where I'm starting to study up Al Brooks' books, the three of his books: Trading, Price Action, Trends, Ranges, and Reversals. But I haven't completed his first book yet. But basically, that's my dilemma at the moment. And for the course of the next few days, probably I will be working on trying to figure out my trading style and how I would proceed from there. Yeah. So that's it for today. It's been a long day. I went to the gym, and I think sorry, I finished my gym a bit later than planned. So it's kind of late, and see you tomorrow. Peace out.